Greetings to each and everyone. This presentation would tackle the different forms of business organizations, together with their advantages and disadvantages. The first form of business organization is the sole proprietorship. Sole proprietorship is what they label a business who is owned and fully authorized by only one person. It is the most common among other forms of business or organization. It can be operated by numbers of people, but in the end of the day, it is owned by only one person. Advantages and disadvantages of sole proprietorship. What makes sole proprietorship advantageous is that it is easy to form since there are also no separate licenses to be used in forming the business. Easy to maintain since there is only one owner. You can completely control it as long as the business owner continues its business. Easy to dissolve since there are less employees and the documents of the business are well intact with the owner. Lastly, it has tax advantages since there is only one owner, which means the report would only be passed through in one income tax form, which basically shows that there is no need to file such tax separately. It also prevents problems such as double taxation. At the same time, sole proprietorship also has its disadvantages. Since there is only one owner, then this owner is held liable in the operation within the business, such as losses and debts. This can be used by lawsuits to easily access the business owner's personal files in terms of having debts.
General partnership is formed when two or more persons bind themselves to contribute money, property, or industry to a common fund with the intention of dividing the profits and ownership among themselves. For the advantages, general partnership is bridging the gap in expertise and knowledge. Partnering with someone can give you access to a wider range of expertise for different parts of your business. A good partner may also bring knowledge and expertise you may be lacking or complementary skills to help you grow the business. Second, more financial resources. A prospective partner can bring an infusion of cash into the business. The person may also have more strategic connections than you do. This may help our company attract potential investors and raise more capital to grow your business. Third, cost savings. Having a business partner would allow you to share the financial burden for expenses and capital expenditures needed to run the business. This could result in more substantial savings than by going it alone. Fourth, more business opportunities. One of the advantages of having a business partner is sharing the labor. Having a partner can not only make you more productive, but it may afford you to the ease and flexibility to pursue more business opportunities. Fifth, better work or life balance. By sharing the labor, a partner may also lighten the load. It may allow you to take time off when needed, knowing that there's a trusted person to hold the fort. Sixth, moral support. Everyone needs to be able to bounce off ideas or debrief on important issues, and we may need moral support when we encounter setbacks or to have cope with work and everyday frustrations. Seventh, new perspective. It's easy to have blind spots about the way we conduct our business. A partnership can bring in a set of new eyes that can help us spot what we may be missed. It may help us adopt new perspective or gain a different outlook about what we do, who we deal with, what markets we pursue, and even how we price our products and services. 8. Potential tax benefit. A possible advantage of a general partnership may be a tax benefit. A general partnership may not pay income taxes. Instead, it passes through any profits or losses to its partners. Disadvantages. First, sharing of losses and liabilities. In addition to sharing profits and assets, a partnership also entails sharing any business losses as well as responsibility for any debts, even if they are incurred by the other partner. Second, loss of autonomy. While you likely enjoy being in total control of your business, in a partnership, you would now share control with a partner and important decisions would be made jointly. Third, emotional issues. A host of issues can surface that may make working with a partner difficult. For example, conflicts can arise from differences of opinion or from an unequal effort put into the business. Fourth, future selling complications. As circumstances change in the future, you or your partner may wish to sell the business. This could present difficulties if one of the partners isn't interested in selling. Fifth, lack of stability. When balancing the advantages and disadvantages of a partnership, you also need to consider if you're able to cope with unpredictability. Even you have a solid exit strategy in your partner agreement, the change triggered by a partner situation can cause instability in the business. Limited liability partnership. It is like a general partnership except that it has two classes of partners. The general partners have full management and control of the partnership business, but also accept full personal responsibility for partnership liabilities. Limited partners have no personal liability beyond their investment in the partnership interest. Limited partners cannot participate in the general management and the daily operations of the partnership business without being considered general partners in the eyes of law. Advantage. First, liability protection. This type of partnership structure protects individual partners from personal liability for the negligent acts of other partners in the limited liability partnership. Second, tax advantages. The partnership itself is not responsible for paying taxes. The credits and deductions of the company are passed through the partners to file on their individual tax returns. Credits and deductions are divided by the percentage of individual interest each partner has in the company. This can be beneficial for partners who have limited interest in the company or special tax requirements due to their interest in the other businesses. Third, flexibility. Limited liability partnership offers participant flexibility in business ownership. Partners have the authority to decide how they will individually contribute to business operations. Managerial duties can be divided equally or separated based on the experience of each partner. Disadvantages. Special tax considerations. Because of special structure of limited liability partnerships and extremely complex tax filing requirements, taxing authorities in some states recognize the structure as a non-partnership for tax purposes. This could possibly be a disadvantage for partners who require special tax consideration. Some states prohibits LLPs altogether because of the tax complexities. Second, it is not recognized in every state. Unlike general partnerships, limited liability partnerships are not recognized as legal business structures in every state. Some states limit the creation of a limited liability partnership to professionals such as doctors or lawyers. Third, one partner can bind the others. Another disadvantage is that individual partners are not obligated to consult with other participants in certain business agreements. For the protection of the overall integrity of the company, you should create a partnership agreement that specifically outlines what each limited partner can and cannot do when making business decisions. The financial statements of LLPs must also be disclosed publicly, which may create an issue for certain partners.
Another type of business structure is corporation. A corporation is an independent legal entity owned by shareholders. This means that the corporation itself, not the shareholders who own it, is held legally liable for the actions and debts the business incurs. Corporations are more complex than other business structures because they tend to have costly administrative fees and complex tax and legal requirements. Because of these issues, corporations are generally suggested for established, larger companies with multiple employees. Advantages of a corporation. So first is limited liability. The shareholders of a corporation are only liable up to the amount of their investments. The corporate entity shields them from any further liability, so their personal assets are protected. Next is source of capital. A publicly held corporation in particular can raise substantial amounts by selling shares or issuing bonds. And lastly, perpetual life. There is no limit to the life of a corporation since ownership of it can pass through many generations of investors. Disadvantages of a corporation. First is double taxation. Now, depending on the type of corporation, it may pay taxes on its income, after which shareholders pay taxes on any dividends received, so income can be taxed twice. Next is excessive tax filings. Depending on the kind of corporation, the various types of income and other taxes that must be paid can require a substantial amount of paperwork. Lastly, independent management. If there are many investors having no clear majority interest, the management team of a corporation can operate the business without any real oversight from the owners.
Another form of business organization would be limited liability company, or also called as LLC. In LLC, business owners are not personally held liable in terms of debts or other said liabilities in the company. This form of business organization are the kinds of entities that are hybrid, which means it is the character combination of corporation and partnership or sole proprietorship. Compared to a corporation, a limited liability company is easier to form when you want to protect your personal assets in case the company fails. The limited liability company can be owned by one or more person, in which they call as LLC members. There is a single member LLC and a multi-member LLC. It depends on the quantity of LLC members. Advantages and disadvantages of limited liability company. What makes LLC advantages is that the business owner's personal assets are protected and they are not held liable of the LLC's debts. They also have tax advantages, which they call pass-through taxation, in which the profit the LLC had made can only be taxed once, and their shares of profits are also reported individually. There is also flexibility in an LLC, since LLCs can be single-member LLC, which means it is owned by only one person, or a multi-member LLC, which means it is owned by numbers of people. Lastly, the credibility of LLCs increases since it is a business structure that is known to be far more formal compared with partnerships and sole proprietorships. LLCs also has its disadvantages as well, although they have a tax advantage because of the pass-through taxation. Somehow it can also be disadvantages, since LLC owners are also expected to pay taxes on their share of LLC income, either they would receive a disbursement or not. And although they are a credible company, some investors most likely does not fund LLCs due to members waiting for the K-1 forms until personal taxes are completed.
Other type of business structure is cooperative. A cooperative is a business or organization owned by and operated from the benefit of those using its services. Profits and earnings generated by the cooperative are distributed among the members, or also known as user owners. So typically, an elected board of directors and officers run the cooperative, while regular members have voting power to control the direction of the cooperative. So members can become part of the cooperative by purchasing shares, though the amount of shares they hold does not affect the weight of their vote. Also, cooperatives are common in the healthcare, retail, agriculture, art, and restaurant industries. Advantages of a cooperative. So first is less taxation. Cooperatives that are incorporated normally are not taxed on surplus earnings refunded to members. So therefore, members of a cooperative are only taxed once in their income from the cooperative and not both the individual and the cooperative level. The second advantage of a cooperative is funding opportunities. Now, depending on the type of cooperative you own or participate in, there are a variety of government-sponsored grant programs to help those establishing and operating new and existing rural development cooperatives. Lastly, it is a democratic organization. Now, the democratic structure of a cooperative ensures that it serves its members' needs. Now, the amount of members' monetary investment in the cooperative does not affect the weight of each vote, so no member owner can dominate the decision-making process. Disadvantages of a cooperative. So first is obtaining capital through investors. Now, cooperatives may suffer from slower cash flows since a member's incentive to contribute depends on how much they use the cooperative services and products. Second is lack of membership and participation. Now, if members do not fully participate and perform their duties, whether it be voting or carrying out daily operations, then the business cannot operate at full capacity. If a lack of participation becomes an ongoing issue for a cooperative, it could risk losing members.
Last but not the least, non-profit businesses or organizations. According to Carroll 2018, non-profit organizations may be generally defined as tax-exempt organizations created for the purpose of serving the public interest. The public interest may be reflected in non-profit organization categories such as charitable, educational, scientific, literary, or religious. Business organizations mentioned earlier work closely with non-profit organizations as they strive to fulfill their corporate social responsibilities with careful attention to their philanthropy and community relations. Starting a non-profit business is similar to starting a for-profit business, with business structures like limited liability corporations and traditional corporations being common. However, where LLCs are the most popular among startups, corporations are the more traditional business structure for non-profits. Non-profit organizations organize themselves like for-profit ones in terms of electing a board of directors and having bylaws. But a crucial difference is that after filing their articles of incorporation, non-profits now then apply to Section 30E of the Income Tax Law. Advantages and disadvantages. One obvious advantage of non-profit organizations is the tax exemption or deduction that they get once they're recognized as a non-profit organization according to our laws in the Philippines. The next advantage is their eligibility for public and private grants. Many foundations and government agencies limit their grants to public charities. Nonprofit organizations can also offer tax deductions to individuals or businesses that give charitable contributions. The next advantage, formal structure. A nonprofit organization exists as a legal entity in its own right and separately from its founders. Incorporation puts the nonprofit's mission structure above the personal interests of the individuals associated with it. Limited liability. Under the law, creditors and courts are limited to the assets of the nonprofit organization. The founders, directors, members, and employees are not personally liable for the nonprofit's debts. However, there are exceptions. A person cannot use the corporation to shield illegal or irresponsible acts on his or her own part. Also, directors have a fiduciary responsibility. If they do not perform their jobs in the nonprofit's best interest and the nonprofit is harmed, they can be held liable. Now we go to the disadvantages of a nonprofit organization. The cost. Creating a nonprofit organization takes time, effort, and money. Fees are required to apply for incorporation and tax exemption. The use of an attorney, accountant, or other consultants may also be necessary. Paperwork. As an exempt corporation, a nonprofit must keep detailed records and submit annual filings to the appropriate agencies and bureaus, as for an example, the BIR, in order to keep its active and exempt status. Shared control. Although the people who create nonprofits like to shape and control their creations, personal control is limited. A nonprofit organization is subject to laws and regulations, including its own articles of incorporations, scrutiny by the public. A nonprofit is dedicated to the public interest. Therefore, its finances are open to public inspection. And that ends our presentation. Thank you very much for staying with us. We hope you learned a lot. For more information, kindly check our references. Thank you and have a good day.